All right, this is followmetrades.com, Real Traders Club live session on Monday, March 13th, 2023. And we're going to take a look at what's going on in the market 30 minutes into the open here. So, of course, the big news is Silicon Valley Bank. Last week, Thursday, Friday, it was kind of a rumble. It's like, yeah, okay, this bank's having issues. And it is spread and now is, kind of a big deal. So it's on everybody's mind. There's a nice shot of it, right? And now it is spreading to other banks. Now, First Republic has dropped 60%, leads the decline in backstops, despite the government's backstop of Silicon Valley. So pretty big reaction. Lots of banks are down. If we look here at the who are the top losers in the U.S. market right now, market movers, we got leaders and laggers, top gainers, top decliners, right? Top decliners are all financial, right? And these are big numbers. First Republic, 67%, Comerica, 40%, Zion, 34%, and on it goes. At this moment, the government has backstopped Silicon Valley. At this moment, to me, it looks like an overreaction. And that can present an opportunity. I think a lot of people remember 2008, 2009, financial meltdown. Right. So far, it looks like this is more contained and maybe, the industry and the government has a chance of doing a better job containing it. We'll see how that plays out. But that, of course, is the biggest news. Let's look at the S&P 500 and see, how that index is doing on a kind of a big picture daily chart. All right, it's going back and forth. It's down 0.26%, quarter of a percent right now. It actually went into the green. You can see here's today's candlestick. Down, and then it was up into the green and down, looking for a little bit of direction. And I did want to point out, last Wednesday, we drew this wedge and said, hey, if price goes below the bottom of this wedge, it's going to continue down. If it goes above, it would continue up in the short term. So, on Thursday, it went below, obviously. And then here we are Friday, here we are Monday. So this wedge formation is pretty powerful. It doesn't give you the big trend, but it gives you the short-term move. We broke out of it here, same thing. So that's a nice formation and can be very, very tradable. We're approaching a pretty good support level on the S&P 500. And again, this drop is driven by the financial industry, primarily Silicon Valley Bank. I think that impact is short-lived. And I got a comment. Goldman Sachs says Fed likely to hold off raising rates short-term to provide liquidity. Yeah, they probably don't want any more shocks than are needed, right? I looked at the financial sector, the SPDR ETF for banking, that is XLF, and it looks kind of like the S&P 500, down, but percentage-wise down much more. Kind of a dramatic look here. And again, my current working thesis is this is a little bit overblown, a little bit overdone, and this may provide an opportunity for a long, but we're going to let that set up on a technical basis, get the probability. We want to see, it's down, from, before this all started, about 35 down to 31, and that's about, call it 10%, very close to 10% drop. So, and this thing has great volume. It's very tradable. We do have a support level coming up here, but already up off to the lows. We got this little gap. So we're going to watch that closely. And again, that could present a long opportunity for us. And another comment, not sure why Charles Schwab's getting hammered. I think it's just if you're in the financial sector, right, there's a little bit of, maybe not panic, but concern. SCHW, we'll just look. Yeah, and they are getting hammered. They're down nearly 10% today, and that could just like we said with XLF and maybe the SPY, present an opportunity. We're going to be careful about that. Schwab's a fantastic company, and they're not going anywhere. So this could just be an overreaction, and let's just look for some opportunities there. All right, with that. We're going to go ahead and turn to the open trades. for today, and be on the lookout for new ones.